Welcome to the SNN.Network Canada virtual event. I'd like to introduce our next presenter, Cameron Watt, President and CEO of Intouch Insight. Cameron, the floor is yours.
Thank you, and welcome everybody. I hope you're enjoying the SNN conference so far. For those of you who have not heard of our story, I think it's been about a year, probably almost a year, since I've presented it to one of these, and so this may be new to many of you. So the first half a dozen slides or so may be repetitive for those of you who know who we are, but I did want to make sure that we cover who we are very clearly for those who are new, and then I will get into some of the kind of pre, during, and post-pandemic things and what the impacts have been for us, and do a little bit of looking forward. With that, I'll move on to the most important slide in the presentation, of course, and that is the legal disclaimer. So I'll let you all take a screenshot and read that at your leisure and move on to something maybe a little more interesting, and that's who we are. So we've been founded in 1992, so we're not a new company. That's, by my count, that's quite a few years ago. Our roots go back to 1978, actually, through acquisition, and we've been a public company for 20 years. Our mission is to create shareholder value by designing, building, and delivering solutions that collect data for customers and provide information that improves business outcomes. And it's that last part that really makes a difference for us. And when we talk about some of the stickiness later as we come through the pandemic with customers, it's really that last line that makes a difference. And that is that we don't just provide data and here you go. We have software and tools built now and processes that actually help our customers improve their own customer experiences and improve their own situation and their revenues and their long-term futures. So that is our mission, and we're sticking to it as much as we possibly can, obviously. Let's take a little look at the board of directors. Michael Gaffney is our chairman. Eric, David, and Reiner are the other three directors. And then there's myself. I won't talk about everyone. My brief bio on myself is that I've got a couple of degrees, one of which being an MBA. I've also worked for some of the largest companies on the planet. I've held management positions with Mars, Unilever, and in those situations selling to the channels that we now do business with. I've worked for Pizza Hut, Frito-Lay. I've also owned my own restaurant. I've owned my own convenience store. I grew up in family businesses. So I have a kind of a mix of entrepreneurial and massive corporate experience. But all of it really relates to the current clients that Intouch serves. And so it's really useful for me and helpful to know and really have experienced what our clients are looking for from a provider like ourselves. But as they say, enough about me. Our capital structure, and again, this slide, I think today we're 72 cents Canadian, but the slides have to be done days in advance. So when I did it was 68 cents. We only have 25 million shares outstanding, a fairly tight float. The market capitalization is only around 17 million, and these are Canadian dollars. Our free floating shares, it's 16.6 million because 34% is insider owned. Eric Butel and myself are the two largest shareholders. And then you've got Michael, Lisa, and others. I want to point out Lisa for a second on this slide because she is new to anybody who's seen slides or looked at us before. And that is because she is the owner, or was the owner, I guess I should say, of the company that we acquired on October 1st of this year. And, I'm going to talk later about that resource a little bit, but having, Lisa invested in the company now and actually having a interest in how we do and making sure that that acquisition is in fact accretive and that we do get all that revenue in the door and that we continue to just launch pad from there. Having her invested in it is just absolutely fantastic from my perspective, and I think from every shareholder's perspective when you do a deal like that. So that's pretty cool. Moving on to the next slide. In terms of what we do, we have two really lines of business or areas that we play in. First, we have our recurring services. And that fits in the form of mystery shopping, compliance audits, and operational audits. And really, rephrase it another way, we go out to every location and make sure something is being done properly. I'll give you some examples. You're a convenience store chain and you've got 1,500 locations across North America. We go and we make sure that you're not selling alcohol or tobacco to people who are underage. we will go and make sure that the customer service being provided is friendly and helpful. We can go and check on suggestive selling. We can also go in and do an overt audit where we can go and check temperatures of coolers, and we can check expiry dates. We can do pretty much anything around that field-based work. And it's very expensive for companies to get somebody to go out to all of their locations on a regular basis, because you've got to use literally thousands and thousands of people to go and do that across North America. So anyone who has a lot of locations across a large geography really uses someone like us, because it saves them money while at the same time giving them key information they need in order to ensure that their service and their other standards are being adhered to, especially in a franchise or licensee world. And not only knowing how they're being represented and their brand is being represented, but in our situation, we then have this recurring software platform. They are tied together, and we can use those tools to help them improve as well. On the recurring software side, we've got the survey platform, which has features and functionality to compete with your Qualtrics and your Medallias of the world. We also have a forms and checklist automation product, which automates anything that historically was done on paper or Excel or other ways. And then we have a business intelligence platform and some event marketing automation that we use with people like General Motors. But the business intelligence platform, I'll highlight for a second, because that is not only useful if you're buying our SaaS products. So the survey and the forms and checklist automation, which, by the way, go by Intouch Survey and Intouch Check. Those two products are sold standalone as SaaS products, and obviously we've been working to grow those. But the business intelligence platform provides information from those two SaaS products, as well as some additional analytical capabilities and some machine learning capabilities. But it doesn't only do it for the SaaS-based software. Our business intelligence platform works if you're buying a recurring service as well. You get certain base elements of that with your services program, which is one of the things that makes us dramatically different than other people who provide services in the same industry, is they get that technology layer that only we have because we've built it. And frankly, no one else on the services side has had the ability to do that on their own. And so it's pretty cool how it ties together. So if you're that same convenience store and you're out there and we're checking the whole chain, you can also use this to check your customer feedback, and then you can put all of that into one spot, see what you need to work on, see what each location needs to work on, and using the forms and checklist product, you can push things back out to the field so that they actually have a tool to improve what they need to improve. So it's really a full ecosystem around customer experience improvement that we provide for these companies. And as I stated, the companies are really location-based for that reason. We're really, of course, if you have a giant call center or you have just one or two big locations, you're at one giant hotel, of course, we're still applicable. But where we've built our differentiation, where we've built our competitive advantage, is when someone has many, many locations across geography and wants to maintain their brand standards and brand image across them. And those are really the industries that we focus on. So, enough about us, so to speak. Let's talk a little bit about that pre-pandemic, right? We had SaaS products launched. We had acquisitions that were completed, that were upcoming. We had strong growth, was very apparent. Our stock was trending upward. Things were looking pretty positive, frankly, in early March of 2020. And in fact, our revenue had increased 130% over 5 years, and that was while we were building the software. With an increase in revenue every year, it looked like 2020 was going to be about $25 million. And, our acquisitions were coming in. We've been doing them since 2005. And, we had one completed actually two completed really before the pandemic hit, and then we had another one announced for May. So we were absolutely moving in the right direction as the pandemic hit. Taking a look at the history a little bit, 2014, we were an $8.5 million business with 45 employees. We then spent a lot of time, effort, and some money. We did our only capital raise in history since we went public in 2017, and we completed a lot of software. We completed a lot of our technological advantages that we wanted to have, and we were starting to see the fruits of that labor. In 2019, we saw almost 30% growth. We saw $1.5 million in EBIT at the same time while our SaaS was growing. Early 2020, that mid-March, it looked like we were actually going to exceed 2019's expectation. We were absolutely on the right trajectory and right path, and I think that we were starting to see that in terms of what the results were coming out and showing. And then, of course, we all know what happened in mid-2020, right? We had a pandemic. But during the pandemic, throughout the entire pandemic so far, and of course we're still in the pandemic to a certain degree, but much less so, we've been EBITDA positive every quarter. We've retained our key employees. So we've kept our knowledge-based workers. We did not lose them. And they did make some sacrifice, which we'll talk about, but we've retained our key employees. We've retained our client contracts, and we even completed that acquisition. We did complete the acquisition October 1st of this year. So the pandemic, we have done a very good job of weathering that pandemic. And if you take a look at that pandemic pause, I'm kind of calling it, this 2-year pause we've been having, we had multiple acquisitions in 2020 and 25, a big run rate, strong EBITDA as we talked about for early 2020. So the COVID response was fairly swift and fairly severe in some ways. We furloughed half the workforce. We put our acquisition on hold. Obviously we started using every government program we could. We also, the board of directors, the employees, every single person who is tied financially to the company took a pay cut, and we permanently reduced the workforce as a result of all that. And then once we reset the game board, we issued some restricted stock units, which we used to reward people for being there during the tough times and taking a financial hit themselves, as well as to ensure that those people stuck around for a year to help us recover, because we knew we were going to need those people to recover. Forward, we were able to do that. People did stay with us. Our customers did start coming back. And, we did have that plan for recovery in 2021, which, frankly, we have been able to do to a large degree. We have had a great year, for the first 3 quarters, are that we had a 54% gross margin, $1 million in EBITDA, almost 100% recurring revenue. Obviously, this is, September 30th, so before the acquisition kicked in, we had no debt and a current ratio of 2.5, and 70% almost of our revenues from the United States. So we had a very strong, 2021. We've had strong performance throughout the pandemic as it relates to, our situation. And when we look forward, our programs are continuing to restart with clients. Anywhere it hasn't restarted, they're continuing to. We're making a significant investment in sales and marketing, particularly now that we've purchased C-Level and some of those resources. We have acquisition revenue that has not been captured at all yet in anything we've reported because we just acquired it October 1st. We're leveraging our technological advantages that we had before the pandemic, and by the way, we built throughout the pandemic. I talked about those knowledge workers. We did not lay off knowledge workers. We kept them on payroll. Sure, we furloughed them for a little bit, government programs that we cut pay, but we didn't lose anyone. And so during that whole time, they've been working. They've been building software. They've been developing advantages. And so, our technology today is stronger than it was going into the pandemic. And again, we're planning to remain EBITDA positive as we look forward, and our expectation is that we will surpass pre-pandemic revenue and trajectory. I want to talk just briefly, when you look at that, is just kind of, I'm going to call that proven value proposition. One of the things that, people always ask is, why do your customers stay with you, or what's your value, or why should somebody buy from you, right? And if you look at our business model and that list of clients that I showed you we focus on, well, those are the industries that were, closing doors, and we were reading about bankruptcies, and we were reading about restructurings, and, throughout especially the early part of the pandemic, it looked just completely doom and gloom for most of the industries that we serve. But you know what? Clients valued the insights that we provided, and they remained loyal to Intouch. The fact that we have, in fact, retained almost all of our clients is proof, that there is importance and value in our software and our services that we provide. The fact that these customers, at their earliest opportunity, brought programs back as soon as their doors were open and they were comfortable they were going to stay open, people have been bringing programs back. And we've been seeing that because the restaurant industry, for example, was the last one to come back because from a dining room standpoint, right? Takeout, delivery, obviously separate. And the only industry right now that we're still seeing a real lag on is the automotive industry. And that's just simply because anyone who's tried to buy a car knows that they don't have showrooms full of cars right now. Their showrooms probably full of winter tires today because they can't seem to get cars. So until they have showrooms full of cars so that we can go and have a normal customer visit, that's the last industry that we're looking for from a recovery standpoint. For the most part, most other industries have now recovered in some way and have found a way to find that new normal, and they have come back to us and they're reactivating programs. And that, to me, is just a strong indication that they clearly value and get value from what we provide. And I just think it's very, very important. Moving on to the next slide here, let's talk a little bit about how we're preparing for that future in the same way. You know, when you look at our software, it's new and it's evolved. I talked a little bit about it, right? But our survey and our check and our BI suite, it's very much new, modern code, well written, and we've been modifying it the entire pandemic. In fact, we actually have customers who use our survey product to do their health check screening for their own employees coming in. You know, we've been very, very careful to make sure that we're staying on top of the trends and making sure our software can handle it. And from a channel standpoint, sure, like I said, customers are getting ready for their new normal. So we are working with them. We are managing new things, and we're positioning our services to be able to measure new things, curbside pickup and delivery and online and takeout. You know, all of those new channels, well, we can measure those just like we can measure the traditional in-store experience. And it actually can be cumulative in terms of the data and the insights that we can provide, because at the end of the day, our customers need to protect their brand. And then at the same time, you take a look at service offerings. Our technology gives a heads and shoulders advantage on our service offerings. You know, when you add in the business intelligence suite, the analytical capabilities that we have, and just our overall technology used, even in the delivery of our platform, it is a huge advantage over competitors in this space. And we are now working to go one step past just being, you know, competitive and being better as it relates to what the customer sees. We're now turning our attention as well to our own operational technology and looking at how the industry functions with regards to things like in securing independent contractors and working effectively and efficiently to get the work done in the field with all these locations. And we're going to come out with a brand new way to do that, which is going to provide us with another cost advantage in the industry, as well as our current advantage in terms of just what we offer. So there's lots of cool things that we're working on from a technology standpoint. Taking a look at value potential, you know, I believe, and this is my opinion mostly probably, but I think we're valued right now being a services business, and it makes perfect sense. You know, we've got a track record as a services business. It's nice, it's stable, you know. But if you look over time, I mean, there's nothing there where you go, oh, look, they're a massive growth story. They're growing 30, 40, 50% most years. They're, you know, big growth story. We haven't seen that. We were starting to see it before we hit a pandemic, right? From a profit situation, we haven't seen a consistent profit story either, because we've been reinvesting our money into our advantages, into our technology. We've been reinvesting to make sure that we actually stay the best and that we continue to grow long term, not just short term. But what that looks like when you start looking at graphs is inefficiency, right? As revenue goes up, profits don't. That looks inefficient. Whereas in our case, it's called reinvestment. And when you take a look at, you know, the significant investment we've made into that software technology, it's a lot. And there's a lot of value that we're creating there. In addition, we have that additional revenue, right, and the operational synergies with that acquisition that we just did. So, and that's a whole new set of revenue that's coming in. And I mentioned I talk about it, but with that acquisition brought not only Lisa, but brought some other very senior key sales resources. And we are now got a team and a pipeline that is absolutely growing, and we're expecting that investment in sales and marketing to start paying off as they start pushing the Intouch advantages out into the marketplace, which we're expecting to provide some accelerated future growth. So when you look at how we're valued, we're valued at a very, I would argue, low multiple. We are sitting, at about 1.2 times revenue, and interestingly, that's based on, again, this is always a couple of days ago, but that's based on pre-acquisition revenue. So the revenue here is based on the Q3 run rate, so it's pre-acquisition revenue, but that's a post-acquisition stock price. So I'm not even sure the acquisition revenue has been priced into the stock at this point, even for a basic services business. I've got Pronto Forms up there, and obviously we've got the new name for SurveyMonkey and the new name for Qualtrics and all those great things. And we know how much these companies are worth and how much they trade for, and I get there's a difference in their pure software. But financially, we're strong. We're stronger in some areas. And we have not been losing money. And we are trading at what I consider to be a great price, which is why I own as much as I do. Because if you put the acquisition revenue into here, we'd be trading less than 1 times revenue on a proven, stable business that, weathered a global pandemic very well financially and came out of it strong, right? Or even stronger, we might find out in 2022. And so I think there's definitely an opportunity here, which is why my next slide is a challenge a little bit in terms of, do you want to capitalize on the opportunity? Customer experience measurement, obviously, is key insights for these people, right? Helping them navigate through the changing landscape is clearly something they value and they didn't want to lose. We have a loyal customer base. We have technology that gives us an advantage. When we get our software and our services combined, it gives true market intelligence. We have a huge, powerful tool there. And, of course, we have recurring models around both the software and the services, both of which we're looking to grow. So, I think there's a huge opportunity for people who are looking to capitalize on it as it relates to taking a look at Intouch. Now, with that, I'll put up this slide and take a look at that while I take a look at the questions. So I've got one question here, which is, how are you going to position yourself in store as media? I got to be honest with you, I'm not sure I understand that question. If in terms of if you're talking about the new digital environment where people are no longer going physically into places, that would be, the channel stuff I talked about earlier, where we are already working with clients on doing online ordering, checking their digital stores, doing their curbside pickup, doing all of the other things that they do. We actually measure not just people hard goods, we actually measure experiences as well, right? So we can even measure people who are just doing customer service phone calls. We can measure anything where there's an interaction of any kind between a customer and something that they're paying for. We can step in and make sure that's being done to standards. I'm not sure if I got the question there, but hopefully that's in the neighborhood. Another question that I have here is, what is your vision for the company in the next 12 months? Well, obviously, grow is probably the first thing I would say. I'm calling it a 2-year pandemic pause. That 2 years ends in March, but I'm looking at it as ending in January from my perspective. I think that the world is kind of moving forward. I think the industries we serve have opened up, and I do believe that we are positioned very, very well to take advantage of that, given our resources, our history, our background, our experience. And so as I look forward, I think that we're going to see very strong growth. We are going to do so financially responsibly, making sure that we continue to remain EBITDA positive. We're not looking to have to raise a whole pile of money because we get ourselves into a financial need. If we were to do a raise, it would be because of a use of cash that was exciting to everybody and exciting mostly to shareholders. Otherwise, we're looking to be operating very, very strong. We're looking to, again, grow is the story. software and services. And I think that as we start seeing results published in 2022, I think we'll start to see that show up. I have announced publicly, obviously, or I can't talk about it before this, that we do expect to return to and exceed our pre-pandemic trajectory, which was significant. So I think that, we're kind of going to be away to the races is how I look at it. And again, the other big thing from a vision standpoint is we're going to turn our technological advantage vision towards our own operational technology as well as the customer-facing technology to work on both the revenue side as well as the cost side from a technology standpoint. And that's kind of where we're looking to go. And with that, I think that we are almost out of time, and so I'm going to let everybody, go and take a bio break, wherever everybody wants to do, and then they can join the sessions that are starting in about 3 minutes. Thank you all for listening, and until next time. Cheers.